Welcome to the June 22nd, 2020 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman and President, McGowanGroup Asset Management. In these reports, we want to help you guide great decisions and for clients illustrate a strategy that sets to be good at three different categories. Safety and income is the foundation. High cash flow, we'll call that global lending. Think of a bank with loans and bonds where you get paid. And, of course, growth with income, dividend companies. And for that foundation, we'll start with where the equity markets are and a look towards the third quarter. We're almost at the end of the second quarter, and I think most people would say, thank God the first half of 2020 is just about over. The Dow Jones Industrial Average finishing this week about where it was in December of 2017. So it's 2.5 years without significant equity appreciation in the markets. The only thing that's gone up is NASDAQ and tech essentially, and we're going to cover a category that may not be as overvalued, may actually be a better bargain. But first I want to go to the economic activity. We're watching how these forecasts change, especially as we get closer. This quarter, it says the annualized rate of change for the U.S. economy is about a 35% contraction. Last week that had been 25, but here's where we come in. Minus 10% is the difference between where we were last year, think 22 trillion on the economy, now 20 trillion. 2 trillion disappeared in the most recent quarter by our best estimate, which would correspond to this right here. Then the third quarter, we've got a 20% rebound projected. That number had been as low as 10, but it looks like 20% growth for this next quarter. And if you triangulate these out for the next year, what you begin to see, 2020 is a minus 5.7%. Now, we take 4% on top of that, 3% on top of that. It means at some point during 2022, under these current forecasts, we reach record economic activity, which hopefully corresponds to record employment. That's a key number, especially after the May jobs report of adding 2.5 million, the June jobs report several weeks away now. All right, just a quick update on what we get from Bloomberg on COVID-19. This is actually the new daily cases running at about 25,000, as low as 18. Similar figures to the end of March. Why is that significant? Well, we're doing about 4 times the testing. In some cases, is over 5 times as much testing, but getting the same number of daily cases. That isolation could be good news. The other number that was significant when we went over the Bloomberg COVID numbers, the daily deaths from COVID have dropped from about 2,500 tragic deaths a day down to less than 1,000, even below 500 in a couple of cases. So is that good news? We'll leave that to the medical experts, but it certainly looks like an improving situation. Here we go with the NASDAQ, and one caution about the NASDAQ, the QQQ index, primarily technology. Back in the tech wreck, it lost 80% of the value, had a decline of over half back in 2008, and right now on a parabolic trajectory where very few companies are showing significant money flow appreciation. That's a dangerous equation for a lot of portfolios because the indexes, even the Dow, a lot of that value is driven by, for example, on the Dow, Apple. So very few companies leading the charge in a rally. If you take out a handful or 10 companies out of the S&P 500, what you'll see is that the broad market is maybe a minus 10 or a minus 20 at this point on a year-to-date basis. Now, the healthcare sector, not as overvalued based upon our research, and medical technology, yes, having a good year, but also a permanent beneficiary of some of the changes going on in the economy, like preparation and, of course, treatments. And so that sector, the medical dividends, is one category that we like. Here on the high yield, just to reiterate, getting paid to wait. If you reinvested dividends through the 2008 tech wreck, it wasn't without price risk, but a basket of loans and bonds has an estimable par value. You can estimate about how much they control. There'll be a default rate in the B market, which usually runs about 2%. Good managers can handle that reasonably well in most cases. And if you reinvested for 5 years, it took the Dow 5 years to get back to its 2007 peak. If you reinvested high yield, similar volatility at the low points, but that compounding effect, 14% for our global high yield example, and an average return just under 10% for domestic high yield. That strategy proved to be a quick recovery to record profits in 2009, and then went on for a much better compounded return, whereas the Dow just got back to even. The energy, by any measure, energy is probably the most undervalued sector of the market. And of course, here's oil hitting minus 37. This week, oil back to $40 at the expiration of the current contract, meaning it settles out on Monday. That tells you, well, we've had a huge swing, but it also says the danger of an implosion at the end of the contract month appears to be a one-time event. What's up for next year? We had an analyst on the program week before last, John Hook. He was saying $55 is the target for the Saudis and Russians. You go out on the futures market, it's all above 40 now, reaching as high as 42.5. So some of the bargains in that space we cover in an extensive interview with Recurrent this weekend. Energy infrastructure, not speculation in exploration or production, but real dividends, infrastructure, the tollways, if you will. That interview posted at NetWorthRadio.com. If it's time to update your plan or upgrade your plan, be sure to come down to the Crescent, meet the team that cares, fully operational. Yes, and you do get a free face mask and free hand sanitizer and a free temperature check. Safe operations, and we look forward to seeing you at the Crescent. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowanGroup, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast. That has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to NetWorthRadio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.